Hello and welcome to day 4 of the Realty Up Mortgage Prepayment Challenge. Today I'm on a slightly different setup. It's a little bit glitchy because I'm on my laptop at the office. Some contractors had to come and redo our gas valves or something strange. This is on the actual place where I have my mortgage that I'm trying to prepay, so it's very meta. Anyway, I'm not sure why, but even Tasty works, and I love those guys, trust them a bunch, but for some reason, it's showing some strange numbers all over the place, especially year-to-date P&L. I promise you I'm not up as much as it says. This is the mortgage prepayment challenge, not the buy a mansion outright challenge. All right. So this is one of those strange days where if I had just not done a thing, if I had just not even logged in all day long and just closed my eyes and let it sit, then I would have actually made a whole lot more money. Instead I had to go in, do a little bit of hedging, do a little panicking, and before you know it, I've hedged away a lot of the gains that I could have made by just sitting there and doing nothing. And that's kind of the paradox where why bother? Why not just close your eyes and pray every single time? And it's because if you might have noticed, almost all of the trades we do are highly likely to succeed, highly likely to make us money. However, the times we lose, we could lose very big, which is why it's almost essential to watch the positions on at least a once a day basis in case you need to make adjustments, in case you need to hedge, because the worst thing that can happen is you get to a point where you're over leveraged, you're trading too big, the position's gotten too dangerous, and you risk just blowing up the account. The goal of the trade today is to mitigate our risks in 3 different ways. We want to keep our position delta or our portfolio delta either close to neutral or slightly negative at all times. So we're either delta neutral or even slightly biased towards a downward movement. And that protects us against what we call the volatility expansion, or the fact that option premium tends to get more expensive when everyone's afraid. To recap, our trade from 2 days ago involved a NASDAQ strangle where we shorted both a put and a call, approximately almost 1 standard deviation away from where it was trading. It was trading right at 16,100, I believe, in the middle. And we just picked a strangle where on the put side, 15,300, on the call side, 16,900. And we make money as long as 45 days later, the underlying lands right in the middle of this region. In practice, we usually close the position about 2 or 3 weeks beforehand. So we just wanted to stay in this area. If the underlying starts to move too violently or too quickly into one of the directions, then we're starting to lose money on the trade. And we're definitely down a little bit on this strangle. It's actually not as bad as I thought, but we're down a little bit. So one way to protect ourselves, to de-risk ourselves, and to keep this trade kind of thematic to what we're trying to do, which is to stay mostly delta neutral or slightly delta negative. Everyone's first instinct is to actually take this leg and adjust it. So they would maybe buy this back and set it at a much lower strike price. The problem with that is you're losing money. It's also not accomplishing some of the other goals that we'll get into. It might fix your delta, but it's certainly not fixing your theta, and also it's actually very capital inefficient because this leg, the one that's supposed to be free money, is actually tying up a lot of your buying power without actually improving your delta theta situation. So by instead, what we do is we take the call leg and actually slide it over to the left so that the underlying is, again, centered between the put and the call side. That actually accomplishes what we need because it will decrease our delta so that's closer to delta neutral. It usually has a minimal impact on our buying power. It can actually improve our buying power because now we're a little bit better hedged, and better, it increases our theta because now you have an option that's actually worth a little bit more, so you have more premium hedging your entire strangle. I know that's a lot I said right there, It'll be something we do all the time, so we're going to get plenty of practice on it. Now, how do you actually do the trade? Well, fortunately, there's a great mechanism. You just actually need to go and find the call option, which is the 16,900 call. And we're just going to do roll strikes down. So again, what we're going to do is we're going to buy back that 16,900 call, the one that's only worth $67 or 67 points. And we're going to sell a new one. Let's call it at 16,200. This is a pretty aggressive roll down, but that's because I really do want to, in one fell swoop, get my delta a lot closer to neutral. So we should be collecting almost 195, 199 or 200 on this trade. Now we'll actually put it on. And usually on rolling an option, you actually also get very good execution. All right, we got it pretty much right at mid. On the 1x2 from yesterday that we did, again, this was where we bought long a put at 15,050 and then shorted 2 at 14,650. You know, the only thing we'll do today, just to keep it simple, is to put on one more tranche of that, just a one lot of that. And we'll probably have to come closer to mid on this one. What's amazing is even with all the violent volatility that's happened since we put this on yesterday, we're only down exactly, I think, 10 points or $200 on it. So again, so far this year, we are off to not the most ideal conditions. An uptick in volatility just in the first 4 days of trading, a pretty big move in NASDAQ. Thankfully, the Tesla 1x2 that we unwound yesterday still keeps us in the black for the year. But what we're going to do is just kind of sit tight, not do anything too crazy, because the next few days will probably clarify whether this is just your everyday recover pretty soon and go back to normal, or if this is the beginning of maybe a more challenging and prolonged slide, in which case we want to reserve enough buying power to put on some of the really profitable trades. All right, thank you very much.